अरे चाचा, फाइनली 31 मार्च का पूरा चकचक खत्म हो गया। मस्त एक लाइफ इंश्योरेंस पॉलिसी ले लिया, 80C में टैक्स बेनिफिट मिल गया। वाह, एकदम सही डिसीजन है बच्चा, मस्त डिसीजन है। मैं तो इस सालों से करते आ रहा हूँ। हर साल 20-25 हज़ार रुपये से डालता हूँ, एंडाउमेंट मनी बैक पे पॉलिसी ले लेता हूँ, टैक्स बेनिफिट बन जाता है, इन्वेस्टमेंट का इन्वेस्टमेंट रह जाता है। क्या चाचा, ये हमेशा का लफड़ा है ये। हर साल गाड़ी का इंश्योरेंस खरीदो। क्यों, कितने का इंश्योरेंस लिया तूने? अरे चाचा, कितने का मतलब क्या, जितना थर्ड पार्टी लायबिलिटी उतना ही लेने का, बाकी सब पैसा वेस्ट, कोई मतलब नहीं। मगजमारी सिर्फ गवर्नमेंट के लिए करना पड़ता है। अरे राजा, तू पागल है, ऐसा थोड़ी होता है। मस्त में बड़ा अमाउंट का इंश्योरेंस लेके रखने का। मेरा गैराज वाला मेरे को मस्त आइडिया देता है हमेशा। ही सेज कि सर, आपका गाड़ी कुछ भी ठुक जाए टेंशन नहीं, मैं आपको बताऊंगा कौन सा इंश्योरेंस कंपनी से लेने का, सारा का क्लेम मिल जाएगा आपको। Confused.
Hello friends, so what we understand from the first story is insurance is a good tax saving instrument. This is what we have been seeing for so many decades. But of late, I am also seeing some articles on pure term insurance, etc. What is life insurance strategy? That's what we'll evaluate. From the second short story, we see two ideas. One, just insure your vehicle in a statutory liability, and second, insure a vehicle only from a inflated claim point of view. What is the right vehicle insurance strategy? That is also we'll try to understand. No wonder every insurance ad says that insurance is subject matter of solicitation. So let's understand insurance better. So here we are, Ticker TV starts this unique program dedicated to insurance to explore insurance for you. In this unique program, we will explore every aspect of insurance, both life and general insurance for you to make you understand the modalities. Our aim is to explore and explain insurance in details, attempt to improve the penetration of insurance in the country, and also to make you understand importance and actual objective of insurance, understand risk management and frauds in insurance, etc. So we have our insurance expert, Mr. Ganesh Iyer, CEO of Pro Risk Consultancy Services, with us, who will explain and explore the insurance space for us. Mr. Ganesh Iyer is graduate in chemistry and a chartered accountant with over 20 years of experience, and he is also a founder member and president of Underwriting and Claims Association of India. So this is how we are going to start the journey of exploring insurance. Let me also tell you this. Prior to this, he was working with private insurance company and he has worked there for 16 years, and he has handled many portfolios from sales strategies to claim. Mr. Ganesh Iyer, welcome to the show.
Hello Manoj, thank you.
So basically Ganesh, ये बहुत confusion है यहाँ पर. Insurance is a very complex thing. Endowment है, you are talking about ULIPs, pure life insurance, online, bank assurance. What is the right and best thing to go about it?
That is why insurance is subject matter solicitation. Wait, Manoj, let's not hurry up. I think it's a vast topic. Let's start with the very basic part of it. First thing is the first story which you saw about tax saving tool. I would like to say insurance is not just a tax saving tool. It's also is a big word, a tax saving tool. There are other parameters of insurance as well, which we can see one by one.
Alright,
so we'll peel insurance every episode.
That's what we are bringing in for the viewers as well. We are trying to crack the word insurance for them.
We have to increase the penetration.
Yeah, definitely. All right. So we'll talk about the penetration in details as well. So what is the difference between, we're talking about insurance and अगर हमने शुरुआत की है उसकी, so what is the difference between sum insured and sum assured? So we have been hearing about it for a long time. If you can just help our viewers understand what is the difference between these two terms.
Yes, it's actually a very good question, Manoj.
Right,
in fact, these words are very synonymous and it's used so fluidly over here. And I'm sure many people are confused by it, including the people in the sector as well. Sum assured, when you use the word, the definition of the word assured means it's assured, guarantee milta hai usme, right? So it's something like that. So it's an amount assured to the insured in the happening of an insured event.
Perfect.
There is no restrictions to it ki okay, itna hoga, utna hoga. It's assured. It's more used in the life insurance terminology actually.
Alright, okay.
Technically it's life assurance. So what happens is the amount is defined. If you say I got a life insurance cover or a life assured amount, some assured amount of 1 crore. So in the happening of the event, 1 crore will be given to you. Bonus, I'm not including bonuses there, that's also an assured part of it.
Sure.
But when you talk about the word insured, insured is the maximum amount. It's not a guaranteed amount.
Perfect.
Okay, which is typically in the general insurance sector. For example, you may insure a vehicle for 20 lakh rupees. Okay, but then suppose you just bang your vehicle and there is a small dent and you need to incur only 2 or 3,000 rupees. The insurance company is not going to give you 20 lakh rupees, sum assured.
True.
But it's not assured, it's sum insured, right?
Perfect.
Insured technically is akin to an indemnity. So indemnity by definition would mean putting you back in the same shoe as you were prior to the loss. It's just indemnifying the loss for you. So that's where the word insured comes. I hope I could clear that piece to you.
So it's really interesting that we are actually going back to the basics and exploring the insurance, and going ahead we will also explore about insurance, and we will also try to understand the best of the insurance companies, and the leading market player will also join us going forward as well. So actually we were talking about two stories, and that's what reminded me. मुझे याद आ रहा था कि you spoke about vehicle insurance, and that reminds me of the second story where one person is talking about actually a third party, and the other was talking about a garage wala, wherein the garage wala has recommended him to buy an insurance. ये garage wala भी insurance agent होते हैं?
नहीं मनोज, गैराज वाले इंश्योरेंस एजेंट नहीं होते आमतौर पर.
And they are not regulated by the IRDA. Are they supposed to give such insurance solicitations? I would refrain from commenting on that piece.
Alright,
Okay.
okay.
But then see, talking about the first part first, the third party liability, it's a very sad thing if people feel कि हमको सिर्फ उतना इंश्योरेंस देना जितना गवर्नमेंट चाहती है.
True.
Okay, as per the act, etc. But unfortunately, that's the way we have been. जहाँ जितना statutory liability है उतना ही करो, जितनी अगर पेनल्टी है तो ही करो, but that's not the right way. Insurance is much beyond it. So a comprehensive insurance is something which everybody needs for a vehicle. Not only a vehicle, if it's a health insurance also is very required. The thought process कि it's only third party liability, only statutory part, उतना ही करना चाहिए. It's a wrong notion. If anybody is thinking, throw it off. Go for a proper insurance cover. Okay.
Perfect.
Now talking about the garage wala piece, it's something which actually I would not like to speak about. It's something which is not in good taste. And I can assure you that insurance companies are not going to pay off all the claims and manage. The garage wala can manage it so easily. Okay. So, and as far as taking the advice is concerned, I don't think it's fair to take their advice because there are better insurance agents who can guide you.
Perfect.
And it's amount होता है, claim settlement process होता है. Why if an amount is high or low, the agent can guide you better. Okay. And second thing is it's important to know the background of the insurance company, the claim settlement process कैसा है, etc. That is very critical. And lastly, talking about the unethical practice of saying that okay, we will try to fake a claim or inflate a claim just to get it. It's something which I would not advise to anybody, and I don't think that's a culture we should drive at any point of time.
Absolutely. So, I mean, for decades we have been seeing that life insurance is being bought and sold mainly as a tax saving tool. In fact, the hurry to buy and sell life insurance in the last quarter is something we have been seeing for a long time. Where is this push coming from? Is basically from the tax thing. So last couple of years, suddenly we have been reading and hearing a lot of protection and term plans. So Ganesh, can you throw some light on the balance between these two parameters?
Now when we talk about term plans and protection, it's a big chapter in itself. Now then you have got the online piece, the offline piece, part of it also. But to start with the basics of it, when we talk about insurance, the insurance is not only a tax saving tool which we spoke of. It's not just an investment alone.
Right.
It's also protection. So what happens is when we talk about insurance, there is endowment being sold or money back being sold, which you saw in the story, right? First story that a guy is very happy.
True.
Then there are some people who say that insurance should not be investments, it should be only term plans. I do not fully agree with it. The reason is not everybody is really equipped or is in a position to manage his resources and finances in a manner that he can say, okay, I can do an investment like this, I can manage term plans like this. It's not practically possible. Insurance actually helps like a forced investment or a tax saving tool also. So ignore the tax saving part of
Perfect,
it. That's a thing which gets added on.
Sure.
But as an investment, suppose if every year or every quarter, the mode you choose, you know that you have to put some amount fixed, and the insurance advisor comes and asks you, helps you out in reminding you, etc. So what happens is, for years, maybe decades, you are used to a pattern of investing some money. It's like the mutual fund SIP which you do, right? So what happens is, gradually this money keeps growing for you. But a mutual fund stops when you stop paying, or the amount is defined when you withdraw it.
Perfect.
But over here, there's a sum assured, remember we spoke of.
Right.
So what happens is, suppose you die. So if something happens to you after third year, fourth year or any year, then what happens? The insurance company comes and gives you the sum assured, irrespective of what the premium amounts you have paid.
Perfect.
So while the premiums which you kept paying as an investment, forced investment premium, we'll say, that kept on helping you grow the investment at the background.
All these years.
Yes, but then if there's a sudden death, despite the fact that these investments have not even touched the levels of sum assured,
Perfect.
but the insurer comes to you and gives you the sum assured. That's the big difference.
That's the beauty of
That's the beauty of insurance.
Yeah.
And when you talk about a term plan, there is no investment component in it. Okay. So the mortality component, the death component is very high.
True.
If anything happens, the insurance company comes and gives you the claim
Right.
amount.
That's taken care of.
That's taken care of. But suppose you survive the maturity period.
Alright. Then what?
Then what? Then obviously you don't get anything, because the insurance
money is lost?
company. It's a very beautiful thing. In fact, I'm happy that you use the right word. Money is lost, because that's the way people
So that's what
think.
everyone is confused. I mean, why should I, invest in something जहाँ पे मेरे को पैसा वापस नहीं मिलने वाला है?
Yes, because you did not invest.
Right.
That's the problem. So people use the word invest and then say that term insurance doesn't give back anything. Term insurance is not about investment. It's about protection.
Perfect.
Because you chose to invest somewhere else and protect through an insurance. Suppose if you are moving down from Mumbai to Pune,
Right.
you are traveling approximately 200 kilometers, and let's say your petrol tank gets empty after 100 kilometers. You have reached, let's say, Lonavala in between. Does it mean that you are not traveled?
We have.
So are you going back to the petrol pump and saying that, oh, I did not reach Pune, so give back my petrol?
So absolutely not.
So petrol was consumed, and it took you up to a particular destination up to which it was destined to move. You didn't have the petrol to go up to that point. It's a different story. So that's the difference which people need to understand. So what happens is, people want to pay less premium, get protected for a larger amount. They want an investment to be done. Somebody advises investment, आप mutual fund में करो या shares में करो या और FD में करो. Nothing is right or wrong about it. So when we talk about insurance, so if you choose to take only protection, so you have to remember it's only a protection tool for you.
Right.
And for a smaller premium, you get a very large sum assured, and the insurer commits to give you that amount irrespective of what stage of premium.
Can you just throw some light on the age factor of this option? I mean, if you have started investing, or investing is not a right word.
Yeah.
So basically, that's what you have corrected me. So if I have opted for an insurance, the suggested insurance which you are saying, that what should be the age group, and what is the premium that ranges from, say for example, if someone wants to start from age of 30 and someone wants to start from the age of 40 or maybe 45 or 50. So what's your suggestion?
Interesting.
If you take a life graph, okay, so suppose let's start with the age of 18 when we mature officially as adults. Okay, you're at 18. So what's the probability of death?
But ultimately, that is something which his father or his mother will pay.
That is where the education, insurance, etc. helps. Like, people want to start off at a young age.
Right.
So if 18 to 25 is the period when normally, as you rightly said, my father had started investing in endowment plan at that point of time.
True.
Right. But let's say at the age of 18, your parents want to start off your investments in your investment. I'm using the word over here, right? So it's a good tool. Let's say you're 23, 24 or 25 when you just started to move into your career path and started earning.
True.
And that's where one piece you need is some investment piece, which may not be very high because your earning may not be high, and you want a protection. That's because of uncertainty. Now what happens is, when you're young, 18, 19, 20, 21, etc., the probability, the uncertainty of death is actually slightly
Lower.
Yes, uncertainty is there.
Hence the premium is also lower.
Yes, so as the age grows up,
Right.
okay, the actuarial science shows that and the experience shows that as the age grows up, the probability of death
So
increases.
the right time to start this thing is
As young as possible.
young as possible.
Yes.
All right. Sure.
So because as an insurer, even in an insurance premium, whether it's pure insurance or an investment plan, there is the mortality component.
Perfect. All right.
Okay, unlike any other form of investment. So what happens is the mortality component is the sum assured part which I spoke of.
Right.
So the insurer has to cover you for the mortality. It's the petrol का पैसा.
Sure.
उतना तो देना,
उतना तो
उतना
देना
cover
ही
करना ही है. तो
उतना
right. So
देना
what
ही
happens is वो जो mortality का पैसा है, component है, that keeps on increasing as the age goes up. So insurer is charging that amount, and even in an investment plan, there is one piece of protection, the mortality
Perfect.
component which insurer takes care
That is
of.
still there with you.
That is always going to be
Perfect.
there. Okay.
Perfect.
That
It's like a life jacket,
yes.
irrespective of you being.
That's absolutely
Yeah,
right.
sure.
So what happens is उतना investment component, उतना mortality component निकाल करके जो बचता है, that amount is used for investment piece of yours, which probably our people need to understand further.
Sure.
So if 100 rupees है, उसमें से 20 rupees mortality है, तो your investment is not going to be 100, it's going to be 80.
80 rupees.
20 rupees is for the mortality piece. I'm ignoring
Perfect.
the admin charges, etc. So this 20, the insurer protects you throughout your life.
Sure.
Okay. And the 80 is used for investment, which grows. So now what do you want to choose? You say, okay, I want to use only this 20 mortality ka charge and take a pure protection, baki 80 I will
Perfect.
use it.
So
separately.
इसका importance very quickly. इसका importance or whom should opt for it?
Who should opt for it? Everybody.
Everybody, right? Of course. So
Can you say, in fact, sometimes when I do a training, I ask the classroom of people, the 30, 40 people, I ask, can you tell me how many people are in this room are going to die?
right.
Okay.
Of course, yes.
So it's 100% probability everybody is going to die. But do you know when? No. That probability is not known.
Yeah.
So that means the certainty of death is there, but uncertainty of the period is there. So to cover that uncertainty, insurance comes into picture.
Perfect.
And that is where probably as a nation, we need to improve our penetration of insurance.
So exactly, actually we have hit the nail. So friends, you saw that how we have tried to explore insurance and explain it in simple terms in our first episode. We shall be dwelling more into various aspects of life and general insurance in the coming episodes with industry leaders that will definitely join us. Thank you so much.